trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to talk about the Treasury bonds. If you remember, we were talking about being short here. But, folks, when you come in to your exact price about 3 minutes before there's a major report, you don't want to stand in front of that because you haven't any control. You would have lost your 7 pips, but that's a silly trade. We already talk about this all the time. See, after the market had missed it here, at one time it had almost a $600. Well, it did have more than a $600 profit, and all it did is make a very, very small correction here. And then when it closes, with the last bar to go, with 15 minutes to go, it's sitting right there at 123.15, and the report's coming out. The risk-reward rate, yeah, you might get lucky once in a while, but lucky is not what you bet on. You bet on probabilities, and the probabilities of that, especially since you have an outstanding target up here at 124, which is the 50% retracement and the 1.618. We're not very far away from that. We hit 124.03 already, and it looks like we're going to get to 06 here, pretty quick. So that's it. You notice here was the 382 retracement. Remember, you have a higher high, so you've got to check the 382 again. We're going to check and see if it was still making the 382s. No, it didn't even come close on that one. So it looks like this is where we're going to run into some pretty strong resistance here in the Treasury. Well, I think so, but you just never know given the fact what's going on. This is the whole thing since the 5th, okay? There was a 3 drive to a top. This was the Dow down 1,200 points that day. Now you can see we're making an ABCD 1.618 expansion here at 124.06. You have to do that one, folks. You got 3 reasons to do it. 1, it's a 1.618. 2, you've got a double ABCD pattern in here. And it's also setting at the exact 50% level. So you have to look at that one. That's really I think that's pretty much of a no-brainer. The actual price is 07. Put that in there. If you want to take a look at it, it would be 124. Make it 06 just for kicks and giggles. And I wouldn't risk more than 24.6. I wouldn't risk any more than $500. I would put my stop at 124. 10 would be 26. That's why 16, 120. Put your stop at 124.20 is where your stop is going to be. So that would be just about under $500. If you wanted to play it close to the vest, you're here at 07 at 1.618. You can't do anything less than that. So if you sell it at 124.06, okay, 124.16, we'll give it 10 pips. 124.16 is all we want to get, but it's coming in there exactly like it. Let's double check the notes. Let's just double check. Stan Harley will be our guest here. I didn't check the notes because I've been watching. I was so amazed that hit the exact 382 in the Dow Jones. I was shocked with that. Had an order setting in there, and hold on just a second. All right, we need to come here and take a look at the notes, and here are the notes. Are going to be right there, and we're going to look at those on an hourly basis also. So here's where we are. You can see the notes have already went up and filled their objective, I believe. Let's see where we are. They've made the 382 now on the big run. That's back here. You got to pay attention to this, folks. Yeah, we're a little above it right now, but let's look at the ABCD and notes versus the bonds. Okay, this made a retracement here to just about the 61% retracement. Bonds could only do a 38% retracement. That's why they were stronger. And now you can see the ABCD patterns that are formed. And we had one other one right here in the notes today, and that takes us just about to where we're supposed to be, and that's at 130. 123.22, that would line up pretty well with that bond trade that we would certainly be interested in doing, okay? So that's what we're watching here this morning. Let's move that out of the way. We've had a request. Well, I know I'll do the Apple first because I always seem to have that as a thing to look at. And okay, here's where we are. Oh, right, we gapped up again, folks. There we are. We gapped up, and we're gapped up right to the 61% retracement in here. So here's where we were, and we gapped up here. Nobody wanted it down here at 196, did they? But that was the place to buy it because there was your big A, B, C, D to the downside. You had a chance to buy it here on the little Gartley, and then you had another chance to buy it here at the 382 right here, and now you got a chance to sell it. But whether you do that or not, I don't know. We've got a gap up, so anything could happen. As they say in the trade, it usually does. Okay, so we've got Apple out of the way. We have to bring in Tesla because I think Mr. Musk is going to be badgering for a cabinet position. If he takes that, I'm going to move to northern Mexico into the Sonora Mountains. Hold on one second. I hate to see anybody lose their career over politics. Tesla, that starts with a T, doesn't it? Yeah, there we go. There's the hour. Now, it's got to be up to date, I would think. Yes, it is up to date because it's in the news quite a bit. And there you can see it's having a pretty good move. Let's just look at the little, check the ABCD fashion on it and see what we've got running here. All right, I haven't looked on it from we got to move this down just a minute, folks. I've got to get the right thing done here. And these patterns are all, I'm going to get rid of some of these things right here. And now we can see the ABCD structure. There's your ABCD leg. You're coming up here pretty soon. You got another ABCD coming in here that we've already exceeded here today. So we are getting ready to get up to this next level. And that will be, you can see that's a 50% retracement of that haul before it dropped from $230, dropped $60. Boy, what a buy it was down there, huh? Okay, there's setting almost exactly at the 50% level. So there should be a little resistance up in this level, but, nothing exciting, that's for sure. Okay, and then we had one other one to look at, and that is the Japanese yen. This is going to be a game changer for a lot of folks. People, here's the 60-minute. We want to be watching for a 382 on this whole thing, folks. I know it's way back here. You can see there was the first one right there. That was there on the 19th of July. Okay, there was the first one we had. There was the second one we had, and now we're having the big one. Okay, this is the 382. So what we're going to do now is we're going to just move this over to a 4 hour so we can see it with the microscope, and there's where we are, and we're just going to take this stuff out like this, and we're going to move this over, take everything out, because here was the high right back here at 162, and then we're going to come down and see if we can get to this level right here, which is 149, folks. Or if you get that chance, you might want to really look at it because this has got a chance to be a monster to the downside. There it is, 149. Keep an eye on it. Should be a good one. 877-927-6648. Stay tuned. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, regarding this Treasury bond trade here, this legitimate trade, selling it at 124.06 and putting your stop at, say, 124.16, you're risking $300. You can see it's very quiet in here. Take out the highs, but just watching it on a really small time frame, you can see we went all the way up here. There's what we're looking for right there. So you can see we should be able to make that without too much trouble. There's only a few more ticks to get to it. So anyway, that's what we're watching here today. Someone's asked me, has my position on the stock market changed? No, my position is I was in some stuff this morning and came out of it okay because of that 382 that we hit in the Dow Jones. I happen to be short the Dow, and over 3 days it makes a 382 retracement with, and so you have to cover there. And it's not bad, but that's the way it was. And did I go long? When I looked at it, I said I should go long, but that report was coming out just right before that, and I don't like to do things into reports, so I said nope, I didn't want to do it. I was thinking about this one right here in Treasury bonds because we were trying to sell this one up in here at 17 and we didn't get there, and then it backed off. So you can't put your order in here just when you can see here's when your report comes out right there. You want to put your order in right there. Look what happens. They just boom, and then it doesn't do much. So now you've got a hourly chart that you're up in this area where you really want to be watching it, very, very closely. Hold on here. We have the euro making a new high, folks. My goodness. We have to take a look at that. That beeper has been on there for a long time. Let's see what's happening. We might have a trade here. There's the euro, and here we are. Oh, we are getting close. Almost close, and here's where we are. Okay, here's where we are. There's the beeper. Okay. All right, here's our action. This is over the last how many days here? There was the big day down. And what are we doing now? We're almost, there was your 61% retracement. Stopped it for a little bit, not very much, about 25, 30 pips. This one right here told you wanted to go higher because there was your 382 right here. And now we're right up in this area where you've got to give it a little bit of room here because you've got a beautiful ABCD here. Let's just measure that puppy to see how close we are. We can tell you where we are. We're there right now. Hold on one second, but we're not at the the other market yet that we want to be watching. See, we're right at the 1.618 level right now, and that is the ABCD on this 382. That's why that beeper was in here. So there should be some pretty good resistance here. The difference here is, see, that's 70. But gee, there's not much of a difference here. So I would be selling the euro here. You know, this is an hourly chart. It's perfect ABCD. It's in a downtrend. I mean, this thing has been in a downtrend. You know, well, we've had an uptrend lately, but it's been in a downtrend for a very, very long time. This is an area where you have a very, very low risk opportunity is what we're looking at here. Your stop has to go above here. So that's, you're not talking about very much, $300. Let me see, 75. Yeah, $300 would be the maximum risk. And so selling them at 75, well, 2 or 3, somewhere there, right? The number was to sell at was 09751. It's at 54 right now, so that's $6.25 times $318. So make sure your stop goes above that level right here. Now let's look at the British pound, because that's also been rocking and rolling. And you'll see, and we've been doing really good. If you'll remember here just the other day, let's get this daily up, because we had a family member that was needing British pounds, and we said, this is where you want to buy them, right here, because there's your pullback. You're right at your 78% level. You're exactly 50% from this low right back here. I mean, there's what you had. And look how many days down you are. This is oversold, folks. You're down from the 15th. This is down 12. It's down 13 days. That's a long time. And now look at it. It's not down today. It's rocking and rolling today. You know, you're up about 2 handles. That's about $1,300. So just remember, sometimes they go up, sometimes they go down. But with this big run like this, we haven't seen anything like this in a while. So something is happening in Great Britain. It must be good. Okay, let's move on here and take a look at one other one, since we're in the ballpark here. We've looked at the yen, we've looked at the Canadian, or that. We want to look at one more right here. Hold on one second, I'll have it for you. Where is that Canadian dollar? Here's the Canadian dollar, is right here. And that should be heading south, as we thought. This is the dollar against the Canadian. You can see it's been going down for quite a while. Just the other day here, when we were at that level, I think we mentioned this on the air, because you had this where the U.S. dollar really took a hit versus the Canadian right there at that big ABCD. And if we look at this on the daily chart, you'll be able to come up here and see there's where you were, right there. That was the big ABCD that we were looking for. And then boom, down she came. Let's just go refresh. That'll get it all in there. So that's what we were watching right in here. So now we're coming down into some pretty good support, and we'll see whether it's going to do much from this level or not. I've been asked to take a look at the live cattle chart, because we were looking to see if that was going to continue going lower. And there's the October cattle. We'll just get it up here. Wow, we held up pretty good. This is good. There was our ABCD pattern right here. You'll see, and there's today's action. We went up and we took out this high by just a little bit, didn't go anywhere. But on this pullback right here, I think all we've done is been able to make a little 382 retracement. So, and it took 2 days to do it. So that's a pretty friendly sign to the cattle market. There was our 382 yesterday and another 382 today. So it's acting like it wants to go higher. We had a beautiful trade in here. This was worth well over $1,000, and now you've made a higher high. I don't see what much would have happened in here today, but that's what we're looking. Let's take a look at the piggies, since we have those in the watch list all the time. And here's December hogs right here. I hope it's December hogs, but bear with me here. Oh, I'm afraid not. I've done something wrong. Shucks. Oh, I didn't do anything wrong. There you go. Okay, here's the hogs. Oh, they're in a buy zone right now. Son of a gun. There it is right here. There's your ABCD. You just hit the 786 here, just about, that was quite a while ago. 1.5 right there on the old, right there, pretty much right on. Well, there's a 618 and it rallied, and there's a 786 and it rallied. So that would have been a good low risk trade if you were looking at that. I didn't have them on my watch list anywhere, but those are the hogs. Watch them here for the today and today or tomorrow. You might get another low risk opportunity to buy down in here on the hogs. But soybeans, folks. Boy, oh boy, you talk about it. This is why you never want to chase these markets. Hold on one second. I've got to get this up here. And there we go. You can see that we're still dropping like a rock, and with basically nothing inside here as far as a rally. I mean, it's just basically straight down. You get a little tiny 3-hour rally here, and then boom, down it goes. 4-hour rally here, boom, down it goes. Look at this on a long-term basis, folks. I mean, it has no support. We're right at the 1.618, but I don't think that's going to hold very much. So let's look at this again. Hey, we've got Stan Harley coming up. I mean, that'll be really great. Stay tuned, folks. The Harley Man will be right with us, so stay tuned.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we have Stan Harley in the house. Stan, how are you doing today, young man?
Hello, Larry. I'm doing just awesome. I don't know if this has ever happened to you, but just as I was about to, as TFNN was calling me to log on, Microsoft sent me a verification code to get into Skype. And so I typed the code. It didn't work. Do it again. Didn't work. Do it again.
Well, see, that's the difference between you and me, Stan. Whenever I get one of those, it always works on the very first time. I never have any problems with the technical part. When you come out to visit me again, I'll give you a 2-hour class on what I do. The first class is bourbon. The second half is tequila. That's about the only way you can live through it. So what are you seeing in the markets? A little rally happening here today. I guess we're going to keep extending into new highs, it seems.
The party just goes on forever and ever. Absolutely. Let's maybe dial in a little bit, and maybe we can try to figure out what's going on here. Let's start with the stock market.
Okay.
First of all, let me show you this chart. This is kind of a repeat of one I've shown here on the air a number of times. This is kind of my bread and butter top to top cycle. It's been quite regular in its drumbeat. 80 trading days. A couple of times it's skipped a beat, but most of the time it's been right on the money. And we talked about this a number of weeks ago, and I was looking for its next recurrence in the vicinity of July 18th, as you can see right here. And the high in the S&P came on the 16th, and the Dow peaked on the 18th. Assuming there's no irregularities the next time around, it's due once again right around November 8th. Anything going on that week? I don't know.
Who knows? Who knows these days?
But it's been a very, very regular heartbeat to the market insofar as defining important highs, as you can see. This is a chart of the S&P 500, a little bit different structure than the Dow. What we've had here is 2 advances off the October 27th, 2023 primary cycle low. And interestingly, both of them have advanced at exactly the same slope. So what I did was I constructed a trend line here in the first advance that topped out in late March. And then I clicked copy and paste to make a parallel line, just dragged it over here. And oh my gosh, it's exactly the same slope. Interesting. Doesn't always happen, but that's what's going on now. What I've also done here is I have spliced the primary cycles. We had a primary cycle low here in October of 2023. We had another one in mid-April of this year. There's another one due in October, and I'll get to that in just a moment. But within the context of those primary cycles, Larry, I find that there are typically 3 or 4 trading cycles, plus or minus, generally about 2 months apart. Bottom to bottom. That's not a precise clock, but that's kind of a general heartbeat for trading cycles. And you can see we had 3 distinct cycles in this primary cycle, and then in the most recent one we've had 2 trading cycles so far, and the third one is yet to come. Notice how we've had right translation all the way up. We had right translation here, here, here. We had right translation in this cycle, right translation in this cycle. And I expect the current trading cycle will experience what's called left translation, meaning the crest or the high point should occur to the left of the middle of the cycle. And just back up a little bit, if you note the trading cycles, you'll note the crest or the high point has occurred to the right of the middle of the cycle. That's known as right translation, and that's characteristic of a rising market or a bull market structure. However, when the market heads south, we tend to get left translation. So I would anticipate the potential of either left or center translation in this current trading cycle, and I'm looking for it to occur in mid-October, and I'll get to that in just a minute. And still looking for an important high in November. Across the bottoms, a little bit different pattern across the bottoms. This is a cycle I discussed with you on the air many, many times as well. It's a 53 trading day cycle. A couple of times it has expanded by 1.5. Another way of saying that it has inverted, i.e. it formed a high when a low was due, but cycles do that, as you know. They expand, they contract, sometimes they invert. A couple of times it expanded by 1.5, and then actually in the most recent trading pattern, it expanded by 1.5, and it occurred right on August the 5th within a day or two of its ideal point, certainly within 1 standard deviation. And we're heading up from there. An interesting Fibonacci pattern evolved over the last several months. What I've done here is I put the center point at the October 27th, 2023 low, and each of these low points on the chart had occurred within 1 trading day of an exact Fibonacci relationship. And I know you are well aware of these, and you talk about these on your program, 0.236, 0.382, 0.618. I know you utilize 786 a lot. I do see that at times, but I find 0.764 to be much more common. And then the 1.00 function, well, I had done the calcs a number of weeks ago, and it was due somewhere in the vicinity of August the 6th with a standard deviation of 1 trading day, and the low came on August 5th, right within 1 standard deviation.
Okay.
So we are predictably heading northbound for the moment. Now, we're going to rocket to new highs. I'm glad you asked that question. I think I have an answer. May or may not be the right answer, but I have an answer.
Hey, I listen to anything, so please, fire away.
Yeah, shut the front door and raise the rent, you know?
You got it, Billy Ray. You got it.
Wow, we had a sharp decline from July 18th into August the 5th. We sliced and diced about 10%, NAS a little more, Dow a little bit less, S&P right in the middle, but roughly 10%-ish. And a lot of folks blaming this on the carry trade in Japan, worries over the Fed, yada, yada, yada. I'm a technician, a cycles practitioner, as you know, and I think it's all about market cycles, all about Fibonacci. And oh yes, we've seen this kind of pattern before. By the way, in 2018, the market went up, 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 up. It peaked out in January. It got really overextended. And then whammo jammo, a 2-week slice and dice, 10% to the downside.
Yep. Stay with us. Stay with us, Stan. We got some bills to pay. Stan Harley coming up next, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're talking with Stan Harley of the Harley Stock Market Letter. Stan, someone asked a question. I think I know the answer, but you don't do individual stocks, do you? You just do the indices. Am I correct?
I'm primarily an index kind of guy, yes.
Okay.
That's what I did as an institutional money manager, and then that's what I personally trade and analyze. Yes.
Okay.
Most of the stocks go up. Most stocks go up and down with the Dow, the S&P, the NASDAQ. I mean, there's a few that buck the trend, but my theory is if you know what the broad market is doing, either an uptrend or downtrend, and then pick your favorite stock, as long as you've got the tailwinds at your back in a rising market, that's going to help you. That's just my theory.
That's what I was hoping you were going to say. Do you ever requested to take a look at a stock? You handle it the same way. You just look at the bar chart. Isn't that correct?
Yes. Look at the stock. Ideally, if it has a pattern similar to the Dow and the S&P, that makes the analysis easier. Not easy, but easier.
Okay.
If it's something altogether different, then it requires a deep dive, a lot more work. What I like about the major indices, though, as opposed to individual issues, is there's so much more data. I mean, I've got data back to the very first day of trading in Amsterdam. I don't have that for individual stocks, but I do have that for the Dow and the S&P. Have we seen this pattern before? Well, I think we may have, Larry.
Okay.
Let's take a look at something that happened just a few years ago. Here's 2018. And just before the break, I was starting to go into this. The market advanced very sharply, got way overextended in January of 2018. And then we had a 2-week slice and dice. It took about 10% off the averages. And then we chopped sideways for a few months. Then we reached this low over here on the chart in April and then in May. And then we powered higher from there and back to new highs. And I think we're in a similar environment. That is to say, I think we're going to chop sideways for a period of time here, and then we're going to head higher. What is that period of time? I'm glad you asked that question. Here is a weekly chart going back to 2019, and what I've done with vertical lines is drawn what I call the primary cycle lows, the ones that really stand out. And there is an interesting pattern here, a very interesting cycle. As it turns out, this cycle, it contracted by a Fibonacci 0.618 at the outset from the 2020 bottom, and thereafter a very regular drumbeat. And when I put the data points into a spreadsheet and do the regression analysis, it computes a cycle of 51.6 weeks. which is approximately 1 year. And assuming the pattern continues without any expansion or contraction, the analysis points to October 11th time period for its next recurrence. And the standard deviation on that is a very low 1 week. And so going back to this prior chart, 2018, I believe because we are so late in the game in the current primary cycle, I think we're going to undergo a kind of a sawtooth sideways chop that's going to frustrate the heck out of both the bulls and the bears. But if one has patience, I think we might be looking at a back up the truck moment here in about 2 months' time. And then from there, I expect us to power back to new highs.
Okay.
And if we got a little time,
there's my favorite. Oh, we have plenty of time, so please continue, my friend. I love this.
I saw you talking about that just before you brought me on the air. I actually agree with you on this one. Not that I disagree, but I'm just saying I'm in agreement with you on this one.
It's okay, Stan. It's okay.
But here's a chart of gold going back to 2010, about 24 years. And what I've noticed across the pattern of highs is my friend Mr. Lucas, Mr. Edward Lucas, who gave Mr. Leonardo of Pisa the name Fibonacci. But Mr. Lucas was a very, very bright mathematician, French mathematician, by the way. Mm-hmm. And he is the one who gave us the name Fibonacci. He is the one who equated the Euclid ratios that the Greek mathematician Euclid came up with back, about 200 BC. And the numerical counts that Leonardo of Pisa uncovered and brought to Europe in the year 1202. And Mr. Lucas, in the mid-1800s, realized that they were all related, put them together, and wrote about it, published his work, and gave Mr. Leonardo of Pisa the name Fibonacci. He
Stan,
also...
what time frame did Lucas live in?
He was in the 1800s, I want to say 1880-ish. Somewhere in there, okay. And sadly, he was under contract to the French government. He was the French government's mathematician, brilliant man, and he was at a state dinner, and a waiter dropped a plate. The plate shattered, the glass went up, cut Mr. Lucas in the neck, and he died from gangrene from that accident. I mean, just like you can't. Can't believe
That's why I don't go to state dinners anymore, Stan. I quit. That's it. No more. Holy cow.
But he also gave us another set of numbers that he found on his own independently. We call them the Lucas numbers, and I've discussed them on the air with you a lot and in my works and my newsletter. I find them to be equal to, if not more powerful than Fibonacci numbers. And then take a look at the pattern across the tops. The Lucas numbers and their times 2 multiples show up in the markets time and time again. All markets, all time frames. Look at the pattern in gold and look at the major highs going back to this high in 2011, and the subsequent high in 2016 occurred 58 months, which is Lucas 29 times 2 later. The subsequent high occurred within 2 months of being an exact Lucas 47. Mm-hmm. The next high was within 1 month of Lucas 18. And we are right now at 29 months from the prior high. So we're right in the heart of the envelope, so to speak. And then gold is bumping up against 2,500. I think we're in an area of resistance, and we just need to be patient. And I think we're going to come back down. In terms of coming down, what is in store for us there? Well, let's take a look at another chart. This is a monthly chart going back to 1970. And
that's known as the good old days for me, babe.
The good old days. Yes, indeed.
Yes, they were.
Well, all of the lows.
Stan, excuse me for interrupting. Do you see where it says March of 1976? I started in August of 76 buying gold and silver when I went to work at Drexel. And I wrote it all the way up to the big high up there in 1980. But I'll end the story there. Go ahead, please continue. That's the only thing I ever did. But go ahead, continue on. Stay with us. We're on a break, but Stan's going to stay with us. I never should interrupt it, Stan. My bad.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. Wrapping it up with Stan Harley, the Harley Stock Market Letter. Stan, when can we have you on again next? 2 weeks from today, would that be okay?
Whenever it works for you, Larry.
Okay, how about tomorrow? And then also Thursday and Friday. And I'd like you on to have every day. I learned so much. Okay, so today is the 13th. On the 27th, we're going to have Stan back on. And if you see something ahead of time that you think warrants our attention, I would really like to know about it. Maybe we could get you on ahead of time. I'll shuffle a few things around and break a few hearts, but we'll get you on here for sure. Stan, you do really great work, and I really do appreciate you helping us out here. It's really helpful.
Well, thank you. My pleasure. One final chart, if we have a moment, and then
go right ahead. Sure, I'm sorry. I thought we had.
We'll conclude here. Here's a chart of gold. Once again, this is a monthly chart going back to 1970, and what I've noticed here is all of the lows, all of the primary bottoms on the monthly chart are separated by a cycle that spans about 94 months. 94 is Lucas 47 times 2. Thank you, Mr. Lucas.
Wow.
But every single low, 94 plus or minus 8 months. And we're in zone. We're in that one standard deviation zone now for the cycle to recur. And so I think we're in zone for making a high, as I pointed out on the weekly chart. And then we'll come down and we'll make another 94-month cycle low, and we'll be good to go for yet higher prices from there.
My friend, thank you very much, buddy. This is as good as it gets. We have 43 seconds left. You're going to tell the folks how they can reach you.
Oh, absolutely. I've got contact info right here.
Okay. Thank you for joining us, Stan. We'll have you on in 2 weeks, okay, buddy?
Absolutely.
Stan Harley Stock Market Letter. We'll be right back, folks. Bear with us. Tomorrow.